Business and life are like a bank account. You can't take out more than you put in. By William Feather. A very good morning to one and all present here. Today, on behalf of Satish Chandra Memorial School, myself Devoshmita Sharkar
and myself
is going to present our topic, how effective has been the reconstruction and the restructuring process for the Indian banking sector. Let us start with a question, what is a bank? A bank is a financial institution that accepts deposits and grants loans. Now, let us quickly look at the history of banks. Long before the creation of the banks that we know today, Venice was pioneer in banking and finance in both public and private sectors. Now, when we know about the world banks, it's time to know about our own country.
Exactly. India's banking history is divided into three large phases. The first phase backs to the date of 19th century with Bank of Bengal, Bank of Bombay and Bank of Madras being the three banks established by the British East India Company during this rule. These banks were known as the presidential banks and were at the forefront as modern banking system until they were merged and named as Imperial Bank of India in 1951. This Imperial Bank of India was nationalized and renamed as State Bank of India for SBI in 1955.
But Aurintho, why was it important to nationalize the Imperial Bank of India?
Well, there were several reasons behind the nationalization of this Imperial Bank of India. One is to remove the monopolistic control of the bank over India's finance, expand its branches, make it more efficient.
Now, let us move to the phase 2, the nationalization of banks. Nationalization of banks refers to when the government buys and takes control of the banks, making it a public sector bank. Nationalization of banks was encouraged by the then Prime Minister Indira Gandhi. And thereafter, from the midnight of 19 July 1969, 14 largest commercial banks were nationalized with reserves of more than 50 crore. Not only that, a second round of nationalization took place in 1980 where 6 more banks were nationalized. And here on the screen, you can see the names of the banks that were nationalized. Now, let us move forward with the effectiveness of bank nationalization. Firstly, branch expansion. Different branches were opened in the backward areas, also in the semi-urban areas. Also, lot of banks were opened in the rural areas. From the graph, we can clearly see that in 1969, there were only few rural banks. But in 1991, there has been a drastic increase in the number of rural banks. Also, priority has been given in the sectors like agriculture.
Basically, nationalization was good for the people, right? But was it actually effective for the bank?
Well, we know that a coin has two sides, right? Similarly, as I've told the effectiveness of nationalization, it also had some negative impact. Firstly, there was huge political interference, like the decisions regarding the branch expansion and the lending of loans were highly influenced by the political considerations. Not only that, the loans were also given under huge political pressure, which led to the increase in non-performing assets.
Regional rural banks were set up for small farmers, landless laborers. They are government-owned commercial banks which works at a rural level, and this also gave a significant rise in the agricultural sector. So from the given pie chart, we can see that Andhra Pradesh, Uttar Pradesh and West Bengal are having the most number of RRBs.
Now, let us move forward to the third phase, the liberalization phase. Narasimhan Committee was a 9-membered committee that was formed by M. Narasimhan and commissioned by the former Finance Minister Dr. Manmohan Singh. The report states that there has been a reduction in the statutory liquidity ratio from 38.5% to 25% and the cash reserve ratio from 15% to 5%. And it led to the increase in the effectiveness of Narasimhan Committee. But it was also criticized as anti-poor because it failed to give us the measures for the faster elevation of poverty from the country, generating new employment.
After the economic liberalization of the 1990s, RBI gave license to 10 new private sector banks. In 1993, RBI guidelines led private sector banks to come under Indian banking system. The motive of this private sector bank was to fulfill the financial needs of the corporate sector. Its effectiveness includes increasing the competition among other banks by increasing its productivity. The technological advancements such as HS Payment banks provide services to migrant laborers, low-income households, and small businesses. They have a restricted deposit of up to 2 lakh rupees per customer. This customer can issue 18 cards or debit cards, or even can use online or mobile transaction. Then we have small finance banks who has only to provide financial inclusion to those segment of the society who has less or zero access to the normal banks, especially the unorganized sector. This also replaces the traditional informal loan system.
Now, the time is changing and it's time for us to move towards cashless economy. The Cashless India is a Digital India program that is initiated by the Government of India that aims to make India a digitally empowered country and knowledge economy. Let us begin with the digital banking, which covers the maximum part of the cashless economy. Firstly, we have UPI, the Unified Payment Interface. It was launched on 11th April 2016 with the mindset of instant money transfer from the bank accounts to the mobile platforms. And not only that, we also have Bharat Interface of Money, which came up in the same year 2016 with the same objective. Now, let us see how effective it has been actually. Firstly, UPI simplified digital payments and it was extremely useful during the pandemic days that we all have used. Now from the pie chart we can see that in 2017-18 only very few people used the UPI, but according to the source of the Finance Ministry of India in 2023-24 there has been a drastic increase in the UPI users of our country.
Next up we have three banking cards, credit card, debit cards and debit cards. Among them, the credit card is used mostly nowadays. And do you know what the maximum user of this card? Us, we students. Doesn't matter if you don't have money in your pocket, you still have the credit card. Just pay the bill at the end of the month. From the given graph, we can see the increase the usage of these particular cards in the recent years. Then we also have alternative payment system, which allows us to perform transactions from Aadhaar number and biometric authentication. Then we also have micro ATMs, which are generally set up at the sales terminal. They connect to the bank via URPS and performs our transaction. We also have internet banking and mobile banking as well as mobile wallets. We are really familiar with these terms and technologies. From the given graph, we can see the extreme increase in the usage of these particular technologies in the recent years.
Now, the demonetization initiative of the government and the onset of pandemic led to the people's mindset towards the cashless economy. But it also led to the increase in the cyber crimes and also increase in public expenditure. The bank merging. Firstly, the Imperial Bank was formed by bank merging and followed by the Union Bank of India recently is merged by the Corporation Bank and the Andhra Bank. अपने लिए अपनों के लिए.
Wait, is that SBI?
Yes, right, it's SBI. In 2017, SBI is merged with 5 of its associate banks along with the Bharatiya Mahila Bank.
Merging of bank aims at creating global-sized banks in India. Bank merger can potentially reduce its operational costs and increase its profitability. It can potentially increase its lending capacity, which is crucial for economic growth. Its effectiveness includes reduction in the non-performing assets. The loan portfolio increases.
Now, the government schemes. Firstly, we have the Kishan Credit Card, which came up in the year of 1998 to provide timely credit to the poor farmers and increase the agriculture productivity. Also, we have the Pradhan Mantri Jan Dhan Yojana, which came up in the year of 2014 and launched by our Prime Minister Sri Narendra Modi sir. It also aims at providing timely credit to the farmers, increasing the agriculture productivity and empowering the farmers of our country.
Indian banking reforms have shown positive progress with significant increase in the financial inclusion, regulatory framework and governance services.
However, challenges persist and there are still some skill issues and talent management issues. So, reforms are needed to achieve the efficient banking sector in India and also improve the financial inclusion in our country. Thank you.
Thank you everyone.
And thanks to our technical team and the operators Shumita Bowling and Rupjit Mitra. Thank you so much.
Really nice.
So basically your theme was the effectiveness of the restructuring. Right? So we started with the scenario of high NPA. After crossing 75 years, we have even higher NPA. Right? So we have taken various policies, various measures cutting down SLR, CRR, bank rates, mergers. Why are we not able to cut down the NPA? That's the biggest plague of the banking system, especially public sector. What's your take on that? NPA, net performing, non-performing assets.